Good evening, everyone. Time for another silver update. This is the weekly chart of gold provided by netdania.com. You can click on the link below. Now you can see here I've drawn in one line. That's going to be the major support line. That seems to be the place where gold has found a bottom. You can see the rapid bounce off of this, and of course the MACD beginning the crossover. Now it has not crossed over yet, and this is not the most bullish pattern you want to see on the MACD. Normally when you get these types of oversold spikes, you get a consolidation period. So I'm expecting to see some up and down motion here to be accompanied by up and down price motion here before we resolve to the upside. It's somewhat similar to the one that we had in 2008, and it's a little bit worse of a line here just because it was so oversold. So the best type of rally crossover that you see with a MACD is going to be one here where you're sort of flatlined and then you cross, and you can see the strength of that rally. These types tend to consolidate and then rally. Nevertheless, we are at the most extreme oversold point you can see all the way back to 1995. We are more oversold than we've ever been. I don't think by any means this bull market is over, but it may consolidate for a while. So let's go to some questions of the night, and the first one is from Mongo9584. Is Detroit really broke? And there's a picture here of GM building. Of course, we know the government bailed out GM, and GM turned around and did a bunch of factories in China, but and some in Mexico, I believe, but really didn't contribute much to Detroit. But let's read the question here. Brother John, I had been doing some checking on the Detroit bankruptcy, and I think they're not telling the whole truth about their finances. What do you think? Google City of Detroit CAFR 2012 and check out the statement of net assets, current assets minus long-term liabilities. False picture of their indebtedness. They only show the balance sheet which hides their wealth. All local, county, state, federal governments do this and claim they are broke just to get us to agree to pay more money. Now that's very, very interesting. Now I've covered the CAFR before, and there's a site that I came across today. I think it's a very good site here. We're going to play a little bit of this. This is the Corporation Nation, and I believe it's Clint Richardson is his name. And it's a really good site going into the CAFR. This is more going from where Walter Burien started and taking it further. Let's watch a little bit of this, and then I'm going to comment.
In recent years, states, counties, and municipal corporations, or cities, and their legislatures have been reporting that the pension fund system is in dire straits. They tell us that pension funds are underfunded, but never explain to us exactly what that means. They refer to their actuarial projections, knowing that the majority of good tax-paying people have no clue as to how these projections are calculated. And they tell us that because of one bad year in the stock and real estate market, that pension funds, municipalities, and even whole states may go bankrupt. These, however, are all lies. They are manufactured inaccuracies and half-truths designed to keep the general public blind to the truth. What is the truth? That collectively, the over 185,000 incorporated governments within the United States of America are hiding and investing vast and unimaginable amounts of wealth from the American people. This theft represents the incremental purchasing by the government of our land, our homes, of our wealth as a people, and of our mutual prosperity. and it represents the complete takeover of our homeland and its infrastructure by this private corporate structure known collectively as government.
So that's a section of this video. You can see it's a 3-hour and 54-minute video. It's very well done. I don't know if I'm convinced about this argument. I did take a look at the Detroit CAFR, and it has definitely decreased in assets. I don't know if these arguments are true. Now, this guy is into that United States corporation type of concept, the Maritime Admiralty and all that stuff. And I really haven't been able to make up my mind as to the validity of that. But it's interesting stuff. It's a very informative video. I challenge you to watch this, and there will be a lot of information that you were not aware of. Now, there is a type of incestuous relationship amongst the governments and the markets. And we can see here with the Dow 30, a lot of people talk about this Dow indicator and why it's so closely watched and why it's so important. Now, when you go in and dig into the CAFR information, you find out, and if you watch that video, he does a running total of Microsoft and Apple to show how many of the shares are controlled by government organizations. I think the figure he gave was 168,000 government entities that have these CAFRs, these investment funds. And a very large portion of the corporations are owned by these government entities. And that causes a lot of problems, incestuous relationships, and I think that's the primary reason you see the attempt, successful attempt so far, by the Federal Reserve and the Plunge Protection Team, the President's Commission on whatever that name is, to financial markets, to prop up the stock market and so far the bond market. These are going to be all interlocked, interrelated markets that have to do with ownership by governments of these corporations, and it's a very large incestuous situation. So I challenge you to watch this video. I haven't made up my mind on it, but it is very informative. And as to the topic of Detroit, I do believe that there have been very large promises made that were inordinate, that were made to government employees. But then again, if we're talking about an 80 or 90% haircut, the question is this something like Greece or what's happening in Europe, where the people are asked to take a haircut, but the banks are never asked to take a haircut? So a very interesting topic. And I haven't made up my mind on this, but I challenge you to watch that information. And on to the next question. This is from Silver Eagle 65, Asian Market Explained. Brother John F., could you please shed some light on what is going on lately in the Asian silver and gold markets? I check the overnight markets early morning and see prices are down quite a bit lately. In an effort to fully understand or try to comprehend what is going on, I'm questioning if this is manipulation on the part of the Asians looking for cheaper prices for bullion stacking, or is it JP Morgan or central bank intervention in the overnight, or could it be something else? I've read articles that mention China entering the markets paper just the same as the COMEX. Does this mean we have more paper chasing the real metals, hence more shorting and more games? Please put this in a perspective that a layman may understand. Thanks, and God bless. Well, I've talked a bit in the past about China and their involvement. I don't see any reason why China would have an interest in putting the price up on themselves. Obviously, at some point, I think that China intends to become a world power, and that's going to involve having a redeemable, a freely tradable currency. and China probably intends to have commodity markets that are trusted worldwide. You have to remember that the main issue is going to be trust. Currently, the vast majority of commodities are quoted in dollars. It's still the case to this day. You have, for example, in oil, if you're talking about oil, you really only have the WTI and the Brent. So you can see that the Americans and the British pretty much control the oil market. They control most of the commodities markets. They're shut down or in very low trading in non-US market hours. I think that's going to change, but I think that while China is biding its time, preparing the opening of markets that will be traded 24/7. There's no reason why any of these markets shouldn't be traded 24/7, and I think that China probably intends to do that. But in the meantime, I think they're biding their time, and they're probably involved in the suppression as they try to stack as much physical silver and gold as they can to try to introduce markets in the future. So let's go over to the latest Jim Willie. This just came out tonight. I'm going to read some of this and comment. This is talking about the breakdown of the system that we currently have and the LBMA and the COMEX. Permit a maxim. The jackass makes a basic claim that if adequate supply is not available at posted price of gold, then it's not the real price of gold. Very simple. The economist whores, harlots, frontmen, marketing shamans, and apologists overlook the basic tenet of price. The price is determined by the market seeking an equilibrium where supply can meet demand, but also demand can clear supply. These are not the industry terms. At the current official price of gold, not to be confused with the gold price, neither occurs. Shortages abound, since inadequate supply is brought to market at the current phony price. Excess demand prevails, since tremendous response comes in reaction to the destruction of the financial system in all its parts. Furthermore, additional demand has arrived in response to the growing awareness that the COMEX and LBMA do not possess gold inventory. The official gold accounts, like Germany's, have been looted. The Western central banks have leased their gold vaults. The Western fiat currency system has as its basis a crumbling sovereign bond system, and the United States has no gold in Fort Knox. If too much demand exists to be met and satisfied at the posted price, then the COMEX price is not the true price of gold. Now, this is a point that Jim Willie has made for a long time, and I agree with him that the prices that we're seeing are not real prices. The prices that we're seeing are just the prices that are established on the paper exchanges, primarily the LBMA and the COMEX. Now, there is delivery at the margins, but there's a lot of things going on. Large volume is not available. There have been rumors about cash payments to settle, not settle in the metal, but to take a 25% cash bonus to settle in cash. Now, a lot of people have criticized me and criticized the people who say there's a shortage. One of the comments today on the YouTube channel was that I can go out today and buy as much silver as I want. There's obviously no shortage. Well, that's not the case if you're a multi-billionaire. You can't go out and buy as much physical silver as you want because it's simply not available. But just because there is something available does not mean there's a shortage. Obviously, if you think about the definition of that, a shortage does not mean no supply. Clearly, if there were no supply, then it would be a crisis and there would be nothing available. A shortage simply means that there are delay times. It means that it's hard to get. It means that there are inconsistencies, and the exact thing that we're seeing in the physical gold and silver markets. So let's read a little bit more of Jim Willey, because he is predicting the shutdown of the COMEX. COMEX to shut down in the near future. Given the artificially low dictated price by the COMEX, the supply is fast vanishing. Soon, the COMEX will be relegated to cash and carry arena, a fact worth repeating. The challenge for the bank syndicate is to keep the game going, to keep the price down, to support the unsupportable fiat currency game, despite having almost no available metal in inventory, to support any semblance of equilibrium. The challenge has no possible success, since over time the supply vanishes and goes away. A false price causes drainage. It is rapid. Notice the signs of diminishing supply, soon to turn critical. And you can see here a chart of the gold price versus the COMEX inventories and ETF holdings. Now, we know that recently with the smackdown, they say that the supply on the GLD ETF has been looted. I really don't know if that's the case. I really don't know how much supply there really is there. But I think when things are completed, we'll find out that there is no supply left in either the GLD or the SLV. It looks like we're looking at the end stages of this game. Again, the LBMA and the COMEX, the Anglo-American exchanges, these are the exchanges that have dominated the world for the last 100 years, and it looks like it's the beginning of the end for them. China is ramping up, and it's clear that Asia has an insatiable demand for gold and silver. India, again, a very big story. We're going to see a large amount of black market gold coming into India because the government, which obviously, in my opinion, is in the pocket of the Anglo-American side, is trying to raise the price of importation of gold and prevent the people of India from stacking physical gold. Of course, all that's going to do is create black markets. So we're looking at the crossover point here for both gold and silver. Both gold and silver are at that crossover point. In the past, it has resulted in spectacular rallies. You can see here when we got across, we got a steady rally. Back here when we got the cross, we got a phenomenal rally, and we had a phenomenal rally here. And so that's the type of action we're looking for. I think when we cross over after some consolidation, we're going to move rapidly towards that 0 point, and it's going to be too late to stack physical silver below $20. We're running out of time, and you probably want to get as much as you can at these unbelievable prices. And we'll talk to you next time.